Tim, what are the big things that taxpayers should be aware of in the wake of the One Big Beautiful Bill Act?
Probably the biggest thing that's in there is something that's not going to be all that attractive or sexy, but it's the biggest thing, and that's the extension of all the rules we've been dealing with for the last several years, ever since the Tax Cuts and Jobs Act. So no increase in tax rates, no changes to deductions, no increase in the estate tax or lower the exemption. Those are the big things. Other things to be aware of, some changes to some deductions, some unique things, kind of targeted, not something everybody's going to get access to, but things for like tips and overtime and seniors, some interesting things there.
And what about business owners? What should they be thinking about when it comes to the One Big Beautiful Bill Act?
There you go. The biggest thing is going to be this bonus depreciation, the ability for business owners to write off the cost of any kind of qualified property in the year that they purchase it. That's a big one for business owners. A couple of other smaller things for small businesses, qualified small business stock, really important decisions business owners have to make in terms of choice of entity going forward. How are you going to structure your business to best take advantage of the tax rules that are out there?
Was there anything that surprised you that was not in the bill now in act?
Yeah, if you go back to some of the earlier versions of this, there were other things in there that didn't get included. The big one being changes to health savings accounts. They were really going to make some major changes to those. None of that ended up happening. There's really nothing in there on the investment side, nothing on capital gains, nothing on retirement plans. So all the same rules in place on the plans you can create, how much you can fund, how much you have to take out. Nothing changed there either.
Okay, so taking all this into account, how are you and the folks over at Baird advising your clients when it comes to investing?
From an investing standpoint, it's a lot of the same things you've always done before. Just to understand the tax rules and the impact of what you're doing. The idea of doing tax projections and tax planning, understanding the marginal impact of any decisions you make, realizing a capital gain, doing a Roth conversion. It's a lot harder to figure out what that really means now than it used to be because of things like phase outs and all these new rules we're dealing with.
And then finally, what about estate planning? Talk about the impacts on estate planning, and once again, what you're telling your clients over at Baird.
So the big thing on this bill was the increase in the lifetime estate tax exemption. It was $14 million roughly now. We were afraid it might go to as low as $7 million. It's actually going up to $15 million. Estate tax planning, really not a big thing for most people. Estate planning, incredibly important. So we spent a lot of time with our clients at Baird talking about what's an important part of an estate plan. Healthcare directives, trusts, the idea of beneficiary designations, all that's still incredibly important, just not as much focus on the tax side.
All right, well, thanks a lot for coming on and talking about it.
Appreciate it, Greg. Thanks.